Morning. Welcome to Eureka Street Crypto Hub. This is Eureka John, your host, and I'm broadcasting live from Leander, Texas. The time is 6:59 in the morning. It is April 12th, 2021. Technically, I'm on vacation from work all week, but for the next 3 days after this, I'm going to be trying to broadcast from my laptop in the morning, so we'll see how that goes. I'll be on the road up in Dallas. Good luck, right? Anyway, this is a show, it's a video blog, that's all it is, nothing more. I'm not a professional in any of this stuff. I'm not a financial advisor. I'm just a dude documenting his progress, learning about cryptocurrency and everything and the projects surrounding it. And it's been super exciting because there's always something going on. I freaking love this space, and I have learned tons about everything. And I don't edit anything. I just record in the morning, put it up, and that's it. So if I say some nutso stuff or whatever, it is what it is, and take it for a grain of salt. Anyway, and let me know if I get something completely wrong or out of whack or whatever. Let me know in the DMs or comments or whatever. And give me a thumbs up. That always helps. I love it. If you want to be that way, give me a thumbs down or whatever. But there's already enough negativity in the world anyway. But if you want to give me a thumbs down and give me criticism, at least tell me why. All right. Okay, so let's get on over to the CoinGecko and let's take a look. Let me get this screen up. Okay, let me refresh this bad boy. And let me take a look here. 60,220.82. I believe this is the 12th day, or more than that even. How many days has Bitcoin been above 55,000? Let's take a quick look here and see here. It's at 60,220.82. And this, hopefully this sticks, Let's zoom out 14 days. Let's take a look. And okay, so for the past 14 days, we've been above 55,000. And let's go zoom out 30 days. We did get below 55,000, maybe, on March 16th, March 22nd, and 23rd, and then, over here on the 24th, 25th. Okay, so we've had, since, I guess we were dipped below it here on March 27th. So since March 28th, we have not been below 55,000. I think that's pretty rad. I mean, it means we've pulled up not just a stool, but we've pulled up a lazy boy above 55,000, and we are here to stay. And now we are at 60,000, but previously we had popped up above 60,000 maybe 4 times or something. But here we are, looking pretty steady with it. I don't think we're gonna necessarily go back down low, super low for quite a while. People say, well, it'll eventually crash and stuff like that. Somebody made a great point. Around the end of the year, people are going to have to start calculating annual profits, a lot of these large corporations. And those profits are going to have to be done in dollars because that's just how our taxes are done. They're done in dollars. So they won't be able to show unrealized profits as something that would count towards the books. And I don't know much about all this stuff and like corporate accounting or anything because I'm just the sales manager at my company. I don't deal with like the books. So, but from what I do know, accounting has to be done in dollars, and you have to turn in your quarterly reports and annual reports, and at the end of the year, they would need to show that in dollars. So will they be selling off their Bitcoin at the end of the year to show their annual report profits made in dollars? I don't know. It's an interesting point that somebody somewhere brought up, and it just kind of lingered in my mind. Anyway, so we have Ethereum sitting above 2,100, and I like that too because I like Ethereum. And regardless of, Ethereum has been kind of a topic all over the place on the radar. People love it or hate it. and I'm happen to be on the side that does love Ethereum, so I'm happy to see this. And the gas prices were down over the weekend, and I'm not sure what caused that. And people like to joke that Chris Blett called off the CZ. Chris Blett joked that CZ called off the bots, and CZ is the head of Binance Coin, and a centralized Chinese cryptocurrency exchange. And this Binance Coin is doing very well, and the Binance Smart Chain is the competitor to Ethereum, the centralized version. And he claims, people say that it's decentralized. Even CZ says that it's not decentralized, that it's a hybrid centralized decentralized version of Ethereum. So yeah, and Binance Smart Chain is basically MetaMask. Yeah, so it even uses the same code and even the same URLs. That's so yeah, all right. And and PancakeSwap uses the same URLs as Uniswap. But whatever, and we've talked about that copying issue before, and how it is more acceptable in some cultures than others. And XRP back up in fourth place. I haven't seen XRP in fourth place since, I guess, this time last year. So congrats to the XRP people. And I did learn about that Flare airdrop. Finally, because I'd been digging around before, couldn't figure out. If you don't know, XRP is branching off into Flare token as well, and the Spark token. I'm sorry, the Flare project, and the Flare protocol, I guess is what you call it. And it is basically going to be, I believe, DeFi on XRP or on Flare, but they're going to be enabling DeFi on that. Things should get interesting. I'll be interested to see what price action the Flare token does and exactly what the Flare token does. So when we get closer to that, mainnet is when we're going to see the airdrops start happening. I will do a specific show geared towards the Flare token. So yeah, I'm pretty interested to learn more about that. I just haven't had time to dig into it. But we're going to see the Flare token drop when it goes out on mainnet. So. And that should be fairly soon. I believe in maybe July. Once again, something else happening in July. Anyway, Tether's at $1. Wow, surprise! For those of you who don't know, it's a stable coin. It's always $1. Always will be $1, unless it goes bankrupt. And then Cardano, $1.32, seeing 11.1% rise in the past 7 days. Polkadot, 40.61. Uniswap, 33.61. Litecoin, 249.72. It's kind of rebounded from its little slump there. And then Chainlink, 32.84. Yesterday it was up to about 30. Did it hit $35? I mean, it hit $34. I was looking down at my phone, just in my mouth dropping for a while. So the all-time high is $36 back in February. Yesterday, if I can ever get this screen to pull up. Things are running a little slow today, and I mean, I feel good about Chainlink today. I always feel good about Chainlink, but I'm a little biased, and that is another thing I'll tell you. Everything I talk about on my show, I'm 100% biased on. I talk about things that I like, things that I'm in the mood to talk about, willy-nilly. I don't follow anybody else's rules or structures. Not that I'm not a team player. It's just, this is my video blog, so I hope you would do the same. And I can't. Okay, here we go. So it's 34.22 is the highest that it hit yesterday. So I guess I could have looked at the 24-hour high, 34.22. Duh. All right. Anyway, so yeah, let's go back over here. So I think we'll see some more good stuff from Chainlink. Chainlink's here to stay. Data network down a little bit at $11.99. That's okay. It's just coiling up, getting ready for that explosive jump, because there's so much good stuff coming here for Theta Network. It's insane, and this is actually a great opportunity to accumulate if that's what you want to do. So yeah, we can go down to here, make sure I'm not missing anything that is particularly standing out to me. Let's see. All right, so I believe we're all good on that. Dang, Pancake Swap up 51.7% in the past 7 days. That's pretty impressive. Go Pancake Swap. Ethereum Classic, wow. Block Stacks making some moves, 85.2% in the past 7 days. So good for Block Stacks. For those of you who don't know, Block Stacks is attempting, or isn't attempting, but it's adding a smart contract layer to Bitcoin, and it will allow smart contract functionality such as DeFi and stuff like that onto Bitcoin. That doesn't, because right now at the point, if you want to do any type of DeFi on Bitcoin, you have to wrap it in Ethereum and put it over on Ethereum, and then you can use it and lock it up and use it in a DeFi capacity and earn money that way with your Bitcoin. So blast me. Anyway, so all right, today I wanted to talk about an interesting topic, something that I didn't really know a whole lot about, and I know don't worry, I don't got the Rona. Front running, and this is something that I've only previously touched on. The Secret Network tries to counteract front running by encrypting transactions up until they are actually transacting. And what front running is, it's kind of tough to explain. And it has been a difficult concept for me, but this is what this show is about. It's about me trying to figure out this stuff and you watching me figure it out and struggle through this stuff and to bang my head against the wall trying to understand it. And then if you know something more than me, please help me out. You know, help a brother out. I've gotten some really good help from some people in various project communities that have helped me have my eureka moment. Aha, eureka! You know, to understand something. And then when I do, it's on. But I think I figured out front running. Front running is, and it's in the traditional stock market too. It happens as well. Front running is whenever somebody can anticipate a trade happening, so they will hurry up and put their trade in before other people or a person has put in their trade, so they can run up the price, and then that person in line will get their trade done, but their trade will end up costing them more because the price for the asset has been driven up by the previous trade that the front runner did, and then the front runner after the trade immediately sells and exploits that arbitrage opportunity because the asset got pumped up and then the person behind it bought, but then they immediately sold after the person behind them, and then there's a delta, a difference between the two, and a price difference. And usually it's not a ton of money, but if you can get like a bot to do that hundreds or thousands of times, it can add up a whole lot. So that is what's happening. There's tons of front running rampant all over Uniswap and every other single DEX, decentralized exchange. And you know, it happens in Reddit groups and what is it, the Wall Street Bets groups and stuff like that, and you know, lots of stocks groups. There's a video here, not altcoin, hold on, let me find this. Chris Dunn TV trading room front running. I will link this video in the description. He talks about it in the from the viewpoint of stocks, but it does help you understand the basics of what front running is, and it's kind of dastardly, you know. It's not a honest practice, you know. It's not necessarily illegal, but it's just kind of scummy, you know. It's just stuff that you'd see bottom dwellers, like, you know, the carp at the bottom of the pond, like eating the tires of some nasty old car. It's just that's just kind of what it seems like to me. So anyway, I will link this video in the description. It is a really good, quick little 5-minute video, unlike my long ramblings. So yeah, but Ari Jules, he works for Chainlink now. He is a PhD at Cornell University, and he has done a lot of amazing work. And he basically solidified and formalized proof of work what Bitcoin is based off of, and mining and everything like that. So he knows what he's talking about. He wrote this opinion piece on CoinDesk, and let me give you a little background on R.A. Jules here. Let's see here. Here's his LinkedIn profile. Professor at Cornell Tech, and hold on here. As you can see, Chainlink Labs and Chief Scientist, RSA, Distinguishing Engineer at Dell. So yeah, I mean the dude's in deep. He's super smart. He knows what he's talking about. Yeah, and let's see here. So here he goes. He acquired Deco. Chainlink acquired Deco from Cornell University, and Deco is an improvement on how to utilize HTTPS and TLS for data transmissions across the internet, developed by R.A. Jules. So yeah, R.A. Jules is deep into a lot of very high-tech and low-level stuff in the tech world that I will never fully understand, and I can already just acknowledge that, but it's okay. Jules previously formalized proof of work, which is now used to secure more than $300 billion in cryptocurrency stored across Bitcoin, Ethereum, and thousands of other cryptocurrencies. So basically, he didn't invent, but he formalized proof of work. So, yeah, that's pretty incredible stuff. So he obviously knows what he's talking about when it comes to stuff miners are doing, because he formalized the entire process. So, all the pleasantries out of the way and formal introductions of the major players here. CoinDesk, in this opinion piece, he says, FrontRunning-as-a-Service is a theft. Now, what is FrontRunning-as-a-Service? Okay, imagine that you go down to the French Quarter in New Orleans, and there's a bunch of pickpocketers down in the French Quarter. There always has been, and there probably always will be. But imagine if those pickpocketers were to obtain a license from the city for being an official pickpocketer. They say, well, pickpocketing is going to happen anyway. Might as well just give them licenses and formalize it so we can take a share of the pickpocketers' gains and give it back to the city. Shoot, it's an industry. It'll be there anyway. Might as well just tax it and capitalize on it. And that's exactly what R.A. Jules is saying is happening about this front running as a service is theft. Is they are now miners proposing to auction the front running happening at these exchanges to be able to sell off the privilege so miners can front run for people, and then take a percentage, the hammer cost, for them providing the opportunity and the equipment, and then letting people front run on purpose. So instead of calling it a crime. So yeah, it'd be like somebody pickpocketing you, and an official pickpocketer, but then if somebody who doesn't have a pickpocketing license tries to pickpocket you, well, they're busted. So, but yeah, so anyway, let's get down to what front running here is in this aspect. Okay, so the miners, how do they front run? Miners are able to order the transactions themselves. And so if you were to pay the miner to put the transaction wherever you wanted the transaction to happen, then that miner could facilitate the front running for you, and you could take the arbitrage profit that happened from the front running process there. So anyway, let's see here. He describes it like this: today's cities direct their police forces to prevent and prosecute theft, but crime is a tough problem and policing is costly. What cities should do instead is auction off the right to mug people and burglarize homes. Sure, burglaries will become more professional to take advantage of any vulnerable property, but on the bright side, cities can use theft auction to pay city workers' salaries, offset shortfalls in tax revenue, and fund new policing initiatives, including prosecution of unauthorized theft. Horrendous idea? Yes, it is, and it's starting to happen in Ethereum thanks to new projects such as flashbots and practices by miners that systematize exploitation of users. Oh, wow. The miner extractable value problem, that's what they're calling it, miner extractable value. It's not pickpocketing, it's Miner extractable value. The paradoxical limitation of most blockchain protocols, including Ethereum and an ETH 2.0, is that while their key feature is decentralization, they are ephemerally centralized. So, while Ethereum is decentralized, the fact that miners have so much control over how and when these transactions happen, it's kind of centralized. They got a lot of power. When miners or validators, for proof of stake as well, because I don't think it's just a proof of work, form a block, they have the power to decide unilaterally what transactions to include and how to order them. So they decide unilaterally what transactions to include and how to order them. The miner can't include bogus transactions or directly steal money from users, so this limited power may seem insignificant. But in a smart contract system, transaction order impacts the flow of money, giving miners more sway. Consider, for example, an automated market maker that allows assets to be traded without counterparties, with like Uniswap and stuff, and 1inch and stuff like that, within a decentralized, well, 1inch is an aggregator, but you get my point. Within a decentralized finance system, buying token X from the AMM causes the price of token X to rise. A miner can exploit this when Alice is about to buy some token X in a transaction T. If the miner gets to include T in a block it can do the following. The miner creates two of its own transactions, pre-Alice's transaction and post-Alice's transaction, and sandwiches the miner's transaction between them. It sandwiches Alice's transaction between the miner's pre and post transactions between them. In other words, it includes the three transactions in the order pre-transaction, transaction, and post-transaction. The miner's transaction pre-T buys token X, while its transaction post-T sells token X at spot. Because Alice's transaction T causes the price of token X to rise, the miner makes money. It's selling token X for more than it paid for. But where does the miner's profit come from? Because the miner by transaction, i.e. transaction T, the pre-transaction, also caused the price of token X to rise. Alice pays more than she would have if she weren't attacked by the miner. In other words, the miner's taking money from Alice. And then here's an article say, yes, front running will still exist in Ethereum 2.0. I haven't read this one yet, but I'm going to get to this one. A 2019-2020 study with a condensed title, Flash Boys 2.0. It is right, let's see. It is right here, and it's behind a paywall, so I can't get to it. So hold on 1 second, I'll get back to that. Explored this phenomenon. One of us was a co-author. Okay, so a 2019-2020 study with the title Flash Boys 2.0 explored this phenomenon. The paper coined the term miner extractable value for arbitrage opportunities available to miners as well as to bots, which can also perform front running by paying high gas prices. The study showed a sophisticated community of bots was already profiting from MEV in Ethereum, miner extracted value. It also explains that the existence of MEV can destabilize consensus in a proof of work blockchain, threatening the integrity of the blockchain itself. And I absolutely agree with that. What happens when a blockchain is clogged up with all these MEV transactions instead of just actual people? MEV exists in all kinds of places, mostly centralized around decentralized exchanges, but is also in unexpected places like CryptoKitty birthing. In fact, there are bots lurking around Ethereum meme pool waiting to discover new MEV opportunities by copying users' transactions. Dan Robinson of Paradigm suggested the term dark forest to describe this behavior. So let's go back up here. This paper here. Blockchains and specifically smart contracts have promised to create fair and transparent trading ecosystems. Unfortunately, we show that this promise has not been met. We document and quantify the widespread and rising deployment of arbitrage bots in blockchain systems, specifically in decentralized exchanges like high-frequency traders on Wall Street. These bots exploit inefficiencies in DEXs, paying high transaction fees and optimizing network latency to front run, i.e. anticipate and exploit ordinary users' DEX trades. We studied the breadth of DEX arbitrage bots and a subset of transactions that yield quantifiable revenue to these bots. We also study bots' profit-making strategies with a focus on blockchain-specific elements. So We observe bots engage in what we call priority gas auctions, competitively bidding up transaction fees in order to obtain priority ordering, early block position, and execution. So yeah, there's a whole big thing going on, a paper on this. You can download it for yourself if you want to pay for it. Hey, what's up, Codeman Deluxe? So let me pause for a second and give this dude a little NFT crate. And yeah, I'm broadcasting live on Theta TV right now. I broadcast live on Theta TV every morning, and I choose Theta TV because I hold the Theta token, and I am biased towards Theta, and I like Theta. Anyway, so back to the subject. Let's see here. So yeah, here's another article on Flash Boys. Let's see, Flashbots Transparency Report. And this is done in January 2021, and it did talk about the CryptoKitties issue. The deal with the CryptoKitties is people, let's see here, okay, white hat rescue of NFTs via flashbots. Basically, anytime a private key was exposed for NFTs, people were sneaking in and stealing it, and somehow they were able to use this minor extractable value to help recover people's NFTs and stuff like that. So the miners are painting a picture that, well, this is a good service because we're using this dastardly technology in order to be able to help people recover some of their NFT assets. Okay, that's great. All right. So there's that. And then here's a video. The miners themselves are explaining to each other on how they can all help each other implement this miner extracted value system, and to help bring in FrontRunning-as-a-Service for all them to pass this knowledge and around to each other. It's a whole 2-hour long video. I haven't watched it yet. I'm gonna watch it and see what they have to say on all this stuff. They're definitely not friendly towards EIP 1559 and the new proposal that will enable token burns that will help the issue of high gas prices in Ethereum right now. But you know, I'm always open to everybody's perspective, so I'm going to listen to this and see and hear their case, and then hear how they think and are implementing this technology, so I can learn a bit more from a perspective that I don't necessarily honestly agree with. But hey, you know, just because I don't agree with a perspective, I mean, first of all, who am I? I don't really know much about all this stuff anyway. These guys probably know a lot more about mining than I do, and I know they do. So you know, I'll listen to the professionals on this and see what they have to say. There's absolutely nothing wrong with that. But at this point, I don't agree with all this stuff that's going on, and Ari Jules doesn't agree with it either, so I think I'll side with Ari Jules on this at this point. Announcing full MEV launch across regions in partnership with Flashbots. So this is them announcing their whole intent to do this FrontRunning-as-a-Service miner extractable value. Say, we are taking our MEV integration out of beta testing and have rolled it across all regions. Using our custom coded node fork called FlexGeth, we can load multiple MEV bundles, which makes us the only mining pool that utilizes MEV fully. The results are only a hint of the possibilities. Flashbots is currently in closed alpha, so only a few searchers are submitting MEV bundles. Of those bundles, our FlexGeth MEV implementation filters out the unprofitable ones, those who take up block space but pay less than the transaction from the gas auction, and adds the one that increased profits. Flashbots is planning to move open to alpha very soon, and once they do, we should see multiple MEV bundles almost every block. This is an epidemic. EIP 1559 burns the gas, which the miners hate, but everybody else is going to love, and it's going to help increase the value of the Ethereum token, but it doesn't burn MEV income. So we believe that MEV will provide a large income boost to balance the EIP 1559 loss for the miners. We have displayed our past 24-hour results below. We expect these numbers to rise dramatically once Flashbots moves to open alpha, such that our miners will receive a 4 to 6% income boost, and possibly even more. Flashbots estimates that millions of dollars in MEV happen daily, and we seek to capture this income for our miners. Wow. So yeah. So this is the miners are all about this. They are gonna they're just hot and heavy. Ready to make them profits off of the average Uniswap user like me. So yeah. So anyway, MEV has been, so back to Ari Jules in this article. And how he feels about it. MEV has been a serious problem for some time, but now things are getting worse. Miners are realizing they can't control miners are realizing that they control transaction ordering and can profit from this power. Anything that bots can do, miners can do better. Some miners are embracing an idea called front-running-as-a-service, aka MEV auctions or MEV optimization as realized by flashbots. Front-running-as-a-service is analogous to the theft auctions we facetiously suggested at the beginning of this post, or the pickpockets and French Quarter that I talked about. Instead of miners developing front-running expertise themselves, in the front-running-as-a-service system, miners auction off the right to front-run users. Specialist arbitrageurs can bid off-chain in real time to place their front-running transactions in mined blocks. The winner of the FAAS auction pays the hammer price to the miner in exchange for having the transactions placed as desired. Proponents and favors say that it's unavoidable, it's going to happen anyway. Miners are at risk of impoverishment. I know what it's like to be broke. I've almost lost my house and barely put food on the table before and stuff like that. And so I don't think a lot of these miners are at risk of being impoverished. Impoverished just seems a little, I don't know. There's a lot of impoverished people in the world. That's all I gotta say. And I don't think these miners are going to be impoverished. So anyway, FAA systems can be used to rescue CryptoKitties and other non-fungible tokens. FAAS allows a user whose private key has been compromised to transfer an NFT in a privately mined transaction without tipping off and getting front-run by an actor. So they're saying we're helping the people, rescue their NFTs. So we're the white hat people. FAS has no underlying principles or notion of fairness and social benefit. Taking advantage of extractable value is in general not a service for society, but often on the contrary. As Ed Felton of Princeton and Off-Chain Labs has astutely pointed out, FAS is essentially a cost imposed on users willy-nilly by miners without any underlying technical or ethical principles, without a principled calibration of cost size, and without any form of community agreement. It's as though City Hall ultimately decided to unilaterally implement theft auctions to make up for a shortfall in municipal tax revenue, and without giving much thought about which homes will be burglarized. Looking at the arguments for front-running-as-a-service, CryptoKitty rescue is, well, a noble activity, but not worth cheating the users. As for miner impoverishment, we don't have strong opinions on how much miners should be compensated, but as we've said, it isn't based on forethought about this question. In addition to ethical concerns, we're concerned it will tarnish the reputation of the smart contract ecosystem and ultimately attract unwanted attention from regulators, which have penalized companies such as Robinhood for systematizing similar practices in traditional financial markets. This is exactly the type of stuff we were trying to get away from. And the traditional finance system is all these cronies going in there and greasing each other's palms and everything like that, in the good old boy system. And it's exactly what they're trying to do right here. Almost everyone agrees that the current state of miner extractable value on Ethereum is bad, so why not instead try to avoid MEV altogether? Would you rather improve security to prevent burglaries or regularize crime and redistribute its profits? Would you rather improve security to prevent burglaries or regularize crime and redistribute the profits? Right? We claim MEV is unavoidable. We claim MEV is avoidable, even though that some FAAS opponents like Flashbots seem to have already given up. Researchers are making strides in the direction of reducing or removing MEV by constructing protocols, permissionless and permissioned, that fundamentally order transactions fairly to begin with. So they're working on it. Indeed, ideas to prevent some forms of front running, such as keeping transactions encrypted while they're ordered, and this would probably be Secret Network, which is doing this, have been around for decades. And I do hold the Secret token. I do like that project, and I did do a video on Secret Network a while back, so you can look back on all the videos and find that one. Implementing these ideas is certainly not trivial and requires substantial research. But to do so, many other worthwhile endeavors in the blockchain community, like layer 2 systems and migration to less energy intensive forms of mining, it is possible that MEV in some degree is inescapable, as financial systems are complex and invariably involve trade-offs. Our point is that research is the root cause, and the foundational solutions for MEV should be community priorities. There is another way. While front-running as a service may seem attractive to address the MEV problem, it makes sense only as part of a false narrative. There's no other way. There are alternative approaches to ordering transactions that provide stronger fairness assurance to users. The approaches deserve to be tried before FAAS becomes the norm. Decentralized systems offer an unprecedented opportunity to rebuild the financial system on a more inclusive, more democratic, fairer basis to help level the tilted playing field created by Wall Street. Let's not blow it just to pick a few users' pockets. So, amen. Yes, amen. I like you, Ari Jules. I did not. Yeah, I'm sure I knew you were like a bigwig and all this stuff, and you're super smart. But this article just made me like you so much more. So, and it's funny because I do follow Junko on Twitter, and if you don't know who Junko is, she is, or he, or whoever Junko is, this Anon, posts a bunch of Chainlink stuff and always pro Chainlink, but she's really funny, and she says. Ari Jules' article on Ethereum front-running ETH gas fees has helped lower the fees to 60 Gwei, and what's astonishing is all the fake volume transactions on Uniswap and DEXs has disappeared. So, what do you know? And here goes Sergey Nazarov, with his Tommy gun. Alright, so anyway, I've gone on longer than I thought I would on this, but it is such an interesting article. I wanted to devote the entire episode to this article today. Tomorrow I have more things I want to talk about. I want to talk about the pirate chain, and I'll try my best to do this. I might wait till I get back so I can cover that in depth. But anyway, I will, the R token, yeah, that's what it is, R. Yeah, anyway, alright, well, yeah, that being said, let me get all this stuff going. You guys have a good week, and hit me up, let a brother know how he's doing, and this whole thing about corruption, this is what DeFi and cryptocurrency is trying to get away from, even though people say that all the underbelly of society deals in crypto. It's not true. It's people that really want to create a better system and a better world than all the crony capitalism and the crony hand greasing and elbow rubbing that goes on Wall Street that basically capitalizes on me and you. So, all right. Well, you guys have a good day, and I will talk to you tomorrow. All right, bye.